Hi there, and you have just tuned in to the weekly wrap-up with me, Doireann Mc Dermott. I have Holger Schmieding, Chief Economist at Berenberg Bank in London on the line. So let's begin by looking at the United States. All eyes were on Ben Bernanke this week, and he told the US Congress that asset purchases depend on economic and financial developments, but they are by no means on a preset course. Now, in your opinion, what were the most important points made by Bernanke this week?
The most important point Ben Bernanke made this week is that the U.S. central bank is flexible. It does intend to scale back its asset purchases, but it will be very dependent on the state of the economy. The message is whatever the Fed does, it will make sure that the recovery remains on track. If the recovery is solid, the Fed will reduce its asset purchases and phase them out by the middle of next year. If the recovery turned out to be wobbly, the Fed would not reduce its asset purchases or not by much. So the overall message is don't worry, the Fed will safeguard the recovery.
And moving over to Asia, we had some Chinese data and the BOJ released its minutes. Now, what data and events do you think had the biggest impact on the Asian markets?
Well, the Asian markets typically look most at China, and I think the biggest news out of China is what we just heard at the end of the week, namely that the Chinese central bank is relaxing some of the rules for lending in the country. And that does show China is very gradually moving forward with the liberalization of its financial market while trying to safeguard stability at the same time. I think this is all in all a comforting message. In Japan, well, the big event will be the upper house elections to come in a few days. So after that, we can probably talk much more about Japan. At the moment, it's largely waiting for politics.
And now let's focus on Europe. This week we saw the Eurozone attempting to make serious changes in order to put the area on a path of recovery. For example, Greece implemented a labour reform, cutting thousands of public sector jobs. Can you tell us more about this and, of course, other major news that we saw?
In the Eurozone, we did avoid a few risks. The Greek parliament voted for the dismissal of public servants and thus fulfilled a condition to get further support for Greece. Also in Portugal, the government is holding together. There are negotiations with the opposition on a joint platform, but all in all, the Portuguese political risk also seems to have receded over the course of the week. So the major message from Europe is risks which were there have not materialized. On top of that, there were not a lot of economic indicators.
We also have the G20 meeting commencing today in Moscow, and the unemployment crisis will be a major priority for discussion. What do you expect to see from the G20?
From the G20, I do not expect really major news. They will talk about unemployment, but the action to combat unemployment has to be taken largely at the national and to some extent in Europe at the Eurozone level. So from the G20, I don't look for market-moving news.
And finally, do you think there's anything else worth noting that was of importance this week?
There is one thing which we could mention, and that was in Europe that the European Central Bank changed its collateral rules. It tweaked it in a way so that banks will find it a bit easier to lend to small and medium-sized enterprises, while at the same time banks may become slightly more reluctant to buy some government bonds of especially peripheral European countries. Net, that is positive because of the ECB's bond buying promise, the OMT program. Government bonds now in the Eurozone need less support than loans to small and medium-sized enterprises. So for the ECB to shift its focus towards supporting a bit small and medium-sized enterprises was a welcome development over the course of the week. Not a huge development, but still welcome.
Thank you very much for that. Well, viewers, that is it for this week, but make sure you join us again next week. But for now, have a great weekend.